Hello, I'm Michael Glass from the FXcast Market Analysis team. This is our FXcast Market Analysis trading plan. In each of our videos, we try to identify high probability trading setups. We'll evaluate the gold chart to see if there's any leading sentiment. We will create a low volatility watch list, an inside bar watch list, and we'll review the economic calendar to see if there are any releases that could affect our open and new trades. As always, please send your comments and feedback to analysis@fxcast.com. As usual, we are starting off with the gold daily chart. Um, the fight to safety in gold continues as the market around the world continue to show some concerns about debt and debt ratings and the strength of different currencies. People are finding safety in gold. In 2 days, we've gone up basically 100 points. I mean, we've got it opened at 1678, but in reality, we opened at 16. We closed at 1655 here. Okay, 1660, and our high for the day is 1760. So in 2 days, we've gone up 100 points. Quite impressive indeed. So I mean, no same person is going to give you a buy or a sell point at this point. It's obviously overbought. Um, your risk tolerance is going to have to be factored in here. You're buying at a high point here, but where do you short also? So when we come over to our hourly profile, our market profile, we can see that we pretty much cycled for the day up and down. We found support in yesterday's high, where we basically closed became our support, and so even when we pulled back and took off. But you can see even today's range is about 1720 all the way up to 1780. So almost a 60-point range just in today. We came down, air kissed, oversold, and we've made our way back up. So the market is once again telling us that there's safety in gold, but again, it's obviously overbought, and your risk tolerance is going to have to tell whether or not you can feel comfortable buying at such high prices. Next, we're going to move to the pound dollar. And what we've been talking about here on the pound dollar is this range, but recently we've been talking about this tighter range of about 1.645 down to about 1.62. So about 200-point range, and that our buyers continually coming in and finding value. So even today, where we did violate that a little bit, we had the 20 and the 50 moving average acting as support, and we did break down through it, but basically right around the FOMC rate release for the states, the market came back, and we remain in this tight range. And so, you guys know how I feel. I really don't like to trade this. This is a tight range. There are trades to be made, especially on smaller time frames. But for our trend traders, our longer term time frame traders, I really don't like to trade this. This is just choppiness. But as we look at it, we can basically see on our hourly time frame that we are below our long-term moving average. We were in a buy zone. We've kind of made our way back into a neutral zone. We can also see that the dollar had taken command, but now they're both below zero, and we had a move up in the pound, although it seems to be weighing off just a little bit, but the dollar is falling harder, which is allowing for us to move up as the dollar is falling harder. Easier to see here where we can see the pound moving down, leveling off, and here we can see the dollar moving down, and then a little bit more of an aggressive or a deeper move down. So as we snake around neutral, that's what we're seeing on the daily chart also. So with the daily chart showing the same consolidation, you can certainly buy the support, sell the resistance, or wait for a trend to develop. Let's move on to the euro dollar. As we switch over to the euro dollar, we can see the move up that it's making. We also have identified this larger range that the market is trading. We really could get rid of the trend lines that we had in here from before. I'll do that afterwards. But the market's been in a trade now. Just like the pound dollar, there is still a lot of choppiness in this, and I'm not sure there's something that I want to trade except for this range. So I want to be shorting up here at around 1.45, and I want to be buying down here about 1.41 until proven wrong, which technically would have stopped out here. But this is your absolute. You definitely want to be buying down here until proven wrong. Certainly we think there's room for us to go lower, but because we continue to put in lower highs, and so we need the market to kind of pivot right around now if we're going to continue to put in lower highs, or are we once again going to test the 1.45 price level? As we look at the hourly time frame, here we can see that we are just above our long-term moving average, and we are, in a selling area, which would coincide with what we're talking about on the daily about needing to turn here if you're going to get a lower high. However, we can see that the euro has taken control, which is going to keep this moving higher. As we saw with the pound dollar, the dollar is continuing to move down, and the euro is moving up, and so that's really why you're seeing this big move over the past hour, and that sort of correlates with the FOMC rate decision with the dollar, that they're basically doing nothing. So larger time frame, we can see, even though we're in a sell area, you can see that we're snaking. And you can see that this 1.437-ish level is a place that the sellers have found value to push this down. Even if we come over to our daily chart, we can see the wicks in here. We can see the wicks of where sellers have found value and pushed us down. Even yesterday, same thing happening. So we are going to have to watch that as well. Finally, we're going to look at the dollar franc. And as we come to the daily, now this is something we could trade. There's clearly a trend. Even once we broke out of this channel, the market has done nothing but move lower. So that's why it's important to watch these channels. We pointed out some channels on the pound dollar and the euro dollar, and now we're seeing some trending action. So this is something we certainly love to trade. However, as far as our philosophy, we have remained on the hourly time frame in a buy zone well below our long-term moving average. As a matter of fact, we've actually closed outside of our Bollinger Band. So, there certainly is eventually going to have to be this move up. Doesn't mean, again, that we're going to come all the way up here. Perhaps our long-term moving average is going to work its way down towards us. But we're clearly oversold on this one. We can see the franc clearly in control, and as it's moving up and the dollar's moving down, you get that divergence. You really had that divergence right here, and you can see that really was when the beginning of the spike. And as the franc came back down, now we're starting to see a little parity and a little bit move back into the norm. So the dollar's still weak, the franc's still strong. This should continue to move lower until the dollar can gain some bearing, some ground on the franc. As we come to our low volatility and our inside bar watch list, we're going to be watching the Aussie dollar and the euro yen on our low volatility watch list. That's our 1 hour time frame with Bollinger Bands. In our inside bar watch list, we're going to watch the euro dollar. Let's go to the economic calendar. As we come to our economic calendar, we can see we have the inflation report for the pound. We have petroleum status, which can affect crude oil. And then down at the bottom, we have labor force survey for the Aussie. We would like to thank you for watching our FXcast market analysis. As we continue to improve and make adjustments so that you're getting value from our videos, we want you to take the time to give us feedback, give us comments, send us questions about what you would like to see in our videos, and you can send those comments and feedbacks to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.